Good morning, Paul Georgie from Allendale. It's April 22nd, 2010. Well, the dollar this morning is higher on concerns over Greece debt. Again, it seems like it's a yo-yo there. One day we're satisfied, and then the next day it's a concern. We're also hearing some concerns out of Ireland here this morning that there may be some problems there. That's got the euro weak and the dollar strong. Crude oil is weaker here this morning, down sharply actually. Looking for some technical support. That support comes in around 82.30 in the June contract here this morning. The 100-day moving average is all the way down at $80.14. So it's something to watch there. It looks like weakness to continue. All of that relating to the grains will probably put some pressure on these markets here this morning, or certainly won't give us any supportive help. The weather is expected to give us some moisture here starting later this evening in the western Corn Belt and on into the eastern Corn Belt over the weekend. Forecast there for about 80% coverage. Some rainfall as much as 1 to 2 inches, which is certainly ideal for the corn that's been put in the ground, for chemicals to start doing their thing, and for some of the anhydrous that was put on and then quickly planted. Rain would certainly be helpful there. So that's definitely a positive to corn production, and could weigh on the market just a bit here today. We did have senators in Washington from the ag states propose or introduce a bill yesterday to extend that ethanol tax credit through 2015. We'll see where that goes here over the next several weeks. The USDA did release their export sales this morning. They were looking for 800 to 1 million tons of corn being sold. Came out at 1.48, so that definitely is a positive, showing that lower prices is creating some demand, especially around the world. We've got technical resistance today in corn at around 365, support at 355, and then 348, and then with the major support at 343 in the May contract. In the soybeans, we've got the export sales there were 369,000 tons. They were expecting 300 to 500, so right in the middle of the range, not giving us much direction from that information. But you know, China has changed its philosophy over the last several weeks here, where they have decided not to buy bean oil and veg oil and want to crush it themselves, and that's providing some support to old crop beans as China continues to look for beans to crush, and it also provides some support in the futures. And that's taken us over the top yesterday. Broke out to the upside on technicals. Had a lot of technical buying yesterday, and that's basically what we're looking for today. Will those technical buyers be here again today? Big trading range yesterday. Expect an inside day today. Resistance at 10.05 with support around the 9.88 level in the May contract. Wheat export sales were pretty neutral. 300 to 500 was the guess. 465 is what the number came out as. We're expecting the wheat market to open a little lower here this morning. However, being supported by the cold weather, freeze warnings in northern China, which could hurt some wheat and cause some winter wheat kill or winter kill over there. That providing some support, and that's about the only positive things you can find in the wheat, as our wheat crop here in the U.S. continues to look better and better as the temperatures are warm, and expecting some rain this weekend. We should have an excellent wheat crop on the way. Over in the livestock, cash cattle trade is nothing done yet today. We've got the cash market, or bids, are around 97 and 98. Offers are 100 to 101. We are hearing some reports that there's been some sales out in Nebraska at 101. The cutout values were down slightly yesterday. Choice down 41. Select actually up 4 cents. So we've had a pretty good demand this week for beef and product. It continues to be strong. When you have a strong product, you usually have a strong cash price. So we're expecting when this cash trade is done this week, we'll be at least $1 higher than last week, which should put us at that $1.99 to $1 range. The technical support in the cattle, we've got 96.30 as the first area of support, and then the resistance at 98.10. The call there this morning, cattle slightly lower. Feeder cattle are going to be watching the grain markets. If we're lower in corn, feeders more than likely will be a little bit higher. In the pork complex, what can you say there? It's the 15th day in a row that we've had higher pork cutout values, $1.37 higher there. Product demand continues to be very strong. We kill less hogs on a weekly basis, and we're expected to even increase that reduction as we go into June. So we could see firm prices hold here, and I think that's the factor that's keeping this hog market moving higher as the days go forward. Cash markets are $1 higher here this morning, again supported somewhat by producers out in Iowa concentrating on getting this crop in the ground before the rain gets here, so that might have an impact on us. But packers are wanting hogs. They need hogs for next week's slaughter already, and willing to pay up for them. Support in the June hogs at 86.15. Resistance and upside target right now is at $88. Looks like a very positive market there. We'd look to buy setbacks in both cattle and hogs at this point in time. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning.